Our nice little green bounce today, absolutely wrecked by a sell-off in the markets. We need to talk about what's going on. I am Dr. Stock, Doctor of Education, and whether we have market rise or market fall, they're not like Pokemon. You don't have to catch them all. Boy, oh boy, these markets though, I'll tell you what, we're going to talk about SPY, IWM, and QQQ and just give some commentary on each one and some technicals on what we get to look forward to from here. We need a sort of game plan, if you will. And I'll tell you what, I got lots of long positions going on, but I also have short hedges out there just in case those longs aren't really in the cards for that rally, that rise yet. And that's okay with me because those longs oftentimes are long-term positions. And in terms of printing for profits today, just a few positions taken advantage of. 18% profit on the way up for Tesla, and then about 6% on the way down. Not so bad. I still have a lot of those short hedges out there. Those plays are alive and kicking. Let's get into the technicals on this one. So here, look at this chart. I want to start off with this one. I want to lay it right down so that you can see it here. And the fact I put this in big, bright red for you. I've shared it before. I've talked about it months ago and said about what could happen if we continue from here. And back here was that originally assumed previous peak, and then we didn't get the turnaround. We had an engulfing candle, took us back up a little bit longer, was able to update this top trend line. You can see that high top wick followed by that fall that we're looking at here. So this rising wedge that we have is a bearish reversal pattern. Now, mind you, it doesn't confirm unless we fall out the bottom of this thing. Will we see a market crash sometime? Well, this, if you look at this rising wedge, we can actually stay in this thing. Again, mentioned it long time ago, these two lines don't actually converge until like 2031. So when you're looking at this, we can stay in here for a while before popping out through the bottom of this thing. However, we can still return to the bottom trend line. So this bottom trend line started back in the pandemic time, March 2020, tagged again in 2022 in October, and then came back down to again in 2023. And so that's the three touches that we have confirming that bottom trend line. This may be one of those times with a lot of the uncertainties that are out in the market that we would come down to that. Now, mind you, from that bottom, we have this 50-month moving average in here, and there's also a 20-month moving average in there, both of which could be incredible support for us, which could tell us about where to find that buying if we continue to sell. Now, something I want to focus on, I'm going to zoom in here a little bit. This candle that you see forming up for August. August is still in its infancy. Today is the 7th of August. We still have 3/4 of the month-ish to go from where we're at right now. So we can get a much better long bottom tail on this thing. It could even turn green. Heck, if the market really were to turn around, we could see it. September, famously not great for the stock market. And well, that's the very next month for us. Now, mind you, when you look back here at a candle that's very similar to what we had, now mind you, the combination isn't necessarily all that similar, but when you see that red candle, long bottom tail, yeah, you had the buying pressure. We came down anyway. Following that, a little bit of mixed time there through February, March in 2022, sold down some more. And well, we know what 2022 was like. We don't want to see that happen again, but if it is going to, we at least want to be prepared for it. This is one of the reasons why I have my short hedges out, is watching this happen. We could be set up for some pain, seeing however August ends, maybe going a little bit lower for September. We're going to have to watch and see what exactly is coming for us. Like I said, I have my long positions that I take, and then I also have my short hedges that are out there. And right now, those short hedges are tending to do pretty darn well. So with the market being as volatile as it is, it's definitely how I want to be positioned with a foot on either side. If you guys want to see those buys and sells, check the link down in the description for the Patreon. The link is there, ready to go for you. Just join the Discord. Buys and sells there as well as me and my community members. Let's move over to the Qs. And there's a little bit more that I want to show you to this, by the way. This is just the daily chart that we're looking at for the Qs, but something interesting that I want to show you here before I give some further commentary is we already tested out the 200-day, and we are getting near the 200-day again. That is not necessarily a great thing for us. Where did we peak out? We got rejected back here at these previous highs that we had, and then sold back off after that, post-market dropping down a little bit more beyond the close. If we come back down to the 200-day, chances are we could push down through that. We want to be watchful for that. Now, there is something similar going on with QQQ and SPY. Let's go out to the weekly chart so that you can see this a little bit more clearly. So let me reset the view, and we're going to zoom on this thing. So what you're looking at here for the weekly chart for QQQ is we potentially, and again, just potential at this point in time, come on in here, we have this nice rounded shoulder here. Oop, there's my technicals. I already had them drawn in there for you. So let me hit Command Z, and I actually want to get rid of some of this stuff. This is one trend line that we got rejected off of, by the way. We also have the 50-week support that's here. I have that drawn on there for you. What's this line coming across? Well, let me tell you about that line that's coming across here. That line is the neckline in the event that we get a head and shoulders pattern, which, mind you, we're missing a shoulder entirely on this side, and I still think there's still that potential for the bounce. Today was not a good day. It did not show us a lot of, it did not give us a lot of confidence, we'll say, that we are going to get that bounce coming up this way before retesting the neckline. If we push down through that 200-day, well, look, it's also pretty much where we find ourselves with the 50-week that we're looking at here, just actually a little bit south of that. So just south of 200-day is where we find the 50-week moving averages. Pushing down below that would be quite a bearish thing. Where are we looking at down below that? Well, we have 400 to look at, which is right about here. And then down below that, these previous peaks that we have that are right around 380. So if we continue to push down, that could happen. If we bounce up, we got to watch out for the head and shoulders. Either way, it doesn't look great for us that we're going to have some massive market rally to follow from where we're at now. It doesn't mean that it couldn't happen. It's just I don't think the technicals are suggesting it. The momentum that we're looking at on a weekly basis is even down below 50 now, solidly below 50. And man, I'm really stuck on my drawing tools here. There we go. This is what we're looking at right here. I'll move that over so you can see it better. RSI down below 50, that can signal a longer term downtrend if the momentum does happen to go that way. If we go to a monthly chart for the Qs, we actually have, as of right now, if we continue the direction that we're going for August, this momentum actually gives us a lower momentum than what we had back here in April, and getting that lower momentum could signal a further drop in momentum as well, and that drop could go along with that price depreciation. So if we go over to SPY and leave the monthly chart and go down to the weekly chart on this to take a look to see what's going on in a longer term trend, we have that similar look here on SPY as well, that we have a potential left shoulder, we have a potential head on. It's a crazy line to see up there. And then the neckline for this, where would that be? You can actually see it. Let me see if I can get this drawn on here in a nice way for you. It looks like right across there would actually be perfect, because we're hitting that peak and we're hitting this valley down here. So the diagonal neckline, it's possible that we do happen to bounce from where we're at. You can see we got rejected off the 20-week resistance. That thing held firm for us. It doesn't mean that we can't try it out again. It doesn't mean that we don't bounce from here. If we do bounce, like I said, we got to be watching for that right-hand shoulder to come on here. And if we do bounce and come back down to this trend line, then we have to be watching for a break of that trend line, because that would confirm the head and shoulders pattern that's on here. So August is going to be very critical in setting us up for September, whether we approach it low or we approach it high. But like I said, infamously, September, not a great month for the stock market. If we move over to IWM, this one's an interesting one. So we're looking at the daily chart, got rejected off the 50-day. Over here, we pretty much sat on it with some indecision, and then got kind of wrecked on Monday, recovered well, took our bounce, got rejected at the 50-day. As long as we can hold the 200-day, which we already tested, if we come back down through it and retest it and end up pushing down through that, that's not great for the small caps. So why do I tell you this stuff? I don't tell you because it's happy news. I tell you this stuff because I want you to be prepared for things that could happen, the places that you should look at for support or for resistance, and what could happen based on that. If we end up breaking up through that 50-day that we have on here for IWM, for the Russell 2000 stocks, that retest of breaking back up through it would be a very bullish thing. And then we'd have that gap to fill up here, which I currently have hidden, but it's there. So let me zoom in so you can see a little bit better. Sorry to jump around so much on the screen. There we go. That gap, 211 to 215. Fill it sometime. It doesn't mean that we fill it right now, but eventually it's going to fill. The lower we approach this thing, the more bullish we can be in filling that gap on the way back up. So if we are able to recover in the markets, we're able to overtake this 50-day that we have on here for IWM. This could be something that turns into a very bullish play instead. We got to watch what happens with the 200-day. That's going to be the key level of support for us. If that fails to hold, we could have a decent sell on our hands for the Russell 2000 stocks. Now, there always is a bottom that happens. It is difficult to tell where that bottom is. Did we see that bottom on Monday? Well, touching the 200, very, very good thing for seeing a strong bounce. And we had that. We went all the way from 196 all the way up to about 208. So a nice 6% jump. And for an index tracking ETF like IWM is tracking the Russell 2000, that's a good bounce. That's a really good bounce to see that take place. Now we have a little bit of profit taking, a little bit of selling pressure on here because there's the lockup that's going on right now, a lot of fear, uncertainty, and doubt, and we could see a lot of volatility between now and then. So there's times when I am 100% bullish on the markets and I have almost entirely long positions with very few shorts whatsoever. And then there's other times where I have a lot of short positions and very few long ones going on. And this is one of those cases. Like I said in my previous videos, I'm going to keep on saying it. I got a foot on each side of this thing. I think we're going to keep on experiencing that volatility, and I want to be able to profit throughout the markets depending on which way it goes. For Tesla, I played it very close to the chest this time, very close stop, because I wanted to capture the upside for the movement, and I ended up getting 18% profit from yesterday until today on that call option on Tesla, holding on to the put side of things just in case we ended up getting rejected at the 200-day. That happened. I was still able to salvage about 6% profit off of that one. That's off a very, very short-term option, just in case we had that rejection. That's what happened to take place. For my other plays, a lot of them are live right now, and we'll see. I will come back and I'll report those results to you. If you guys want to see those results early, you can see my buys and sells over at the Discord, available through the Patreon, link down in the description. And now, mind you, for technical analysis, if you want to learn to do this for yourself and you want to pick out your own plays and you want to see what I'm seeing, and if you want to keep on learning to develop your trading strategies, there's a link for that down in the description as well. You can snag that technical analysis trading course. It has the bread recipe right in it, which is a trading strategy that I use myself. High levels of success, not only for me, but for a lot of other people who use it effectively as well. Like I said, that link's down in the description. Make sure that you use the code word DOCTOR, DOCTOR, to get massive discounts on that. Guys, I'm going to let you go for right now. Be careful out there with those markets. They're going to be choppy. They're going to be volatile. We don't know the single direction that it's going to go. We could have that bounce that I talked about in my previous videos. That could still continue at this point in time. We also need to be careful that that doesn't happen and we end up dropping instead. And then there's always that limbo move where we trade sideways throughout the month of August. We're going to have to see what September brings to us. Keep in mind that monthly chart. Go back to the monthly chart that I showed you for SPY, tracking the S&P 500. It's not often that we have a large red candle like that. Now, mind you, we still have 3/4 of August to go, so we're going to have to see if that persists. If we get such a massive, big old red candle for August, then there's a potential that we keep on moving in that trend for September, for October. Maybe it takes us up to the election. We're going to have to see. But like I said, we can learn to profit in either direction. I like to use options to do that. Calls, puts. Oftentimes I use long positions for those, which means I buy them. But there's other times where it is prudent to sell them instead, and that's called short options. And it's a little bit different than being long or short on stocks, just so that's out there. Now, mind you, that trading course that I talked about, there is a chapter in there where I describe some of the things that you would want to know about options, and I have more of that available over at the Patreon as well. You can see some of the material that I have on options as well to sort of give you an introduction into that, and I will continue to develop that over time, moving into those advanced trading strategies. Guys, thank you very much for watching. I really do appreciate it. Let me know down in the comments what you think of this video. Hit the subscribe button if you would like to see more of my content, including the NVIDIA stock price prediction and earnings projection that I'll have coming out in the very near future here, especially with NVIDIA closing down below $100 per share today. It's going to be critical that I get that done and out to you in time, so that if we do have that massive move up, or if I expect it to pull back from there, that we're aware of it and we can take advantage of it. Thanks again, guys. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.